Hello there. Welcome to this Markets.com company profile of JP Morgan Chase. I am your host, Luisana Swegart. Thank you for joining us. Let's get started with some background information. Founded in 2000 by JP Morgan & Company and Chase Manhattan Bank, the company's headquarters are located in New York City. More than 195,000 employees work for the company, which operates worldwide and has a market cap over $133 billion. The main operations for JP Morgan Chase include investment banking and financial services. The company is run by CEO James Dimon and CFO Michael Kavanaugh. Moving on to the market, JP Morgan Chase is traded in 9 exchanges, including the New York, London, Stockholm, Frankfurt, Swiss, and Mexican exchanges, among others. The major indexes it trades on are the Dow Industrials and the S&P 500. Let's take a close look at some financial figures for the company, starting with 2007, in which JP Morgan Chase reported revenues over $160 billion, with net earnings at $15 billion. Taking a look at the balance sheet, total assets were at $1.5 trillion and total liabilities at $1.4 trillion, with shareholders' equities at $123 billion. On December 31st, JPM stock closed at $43.65. In 2007, over $5 billion was paid out in dividends. JP Morgan's vision for growth is based on its strong capital position compared to other financial institutions. Through such tough times all financial institutions have been facing recently, JP Morgan looks to be one of the best positioned companies. They have had not as much losses and capital level deteriorations as other companies have experienced, which has allowed them to keep lending in the mortgage market. This strategy has allowed them to almost double their market share in that market. The strong capital levels also allow them to invest in other growth opportunities that other banks have to miss out on. They also have similar plans to those of other financial institutions, which are using their name to grow in emerging markets, to recruit and use top-level talent to grow, and finally to use the scale of the global banks to help their customers, which will help with their growth. In March of this year, JP Morgan acquired Bear Stearns in what was a historic event. In the purchase, JP Morgan acquired what had been previously one of the biggest investment banks in the world. The deal has been described as a shotgun wedding by many, as nobody saw it coming. Bear Stearns' capital structure had diminished quickly, and the financial world, not being prepared for the situation, would have been dramatically turned upside down. However, a direct bailout where shareholders would be saved was not in the plans of the U.S. regulators, and instead they would work on finding a purchaser. At the time, and even at the moment, most banks were badly capitalized. The Fed had to find someone with the capital integrity to purchase Bear Stearns quickly, and it found JP Morgan. The deal that JP Morgan got to acquire Bear Stearns was to its liking, as it would get $29 billion loan from the government and put up $30 billion of the worst assets on Bear Stearns' books as collateral. The rate of interest on the loan is a fixed 2.5%. Any losses in the value of the collateral would be absorbed by JP Morgan for the first billion, but beyond that, the Fed would be on the hook for the losses, meaning that JP Morgan's losses from liabilities would be limited by the Fed. With that deal in place, JP Morgan went on to purchase the fledgling Bear Stearns for $10 a share. However, it had only been a little more than a year before that when Bear had been trading for more than $170 per share. With the acquisition now done, it looks like JP Morgan and CEO Dimon got the prime brokerage firm that they had always wanted. JP Morgan has been one of the most strongest banks in the U.S. markets in the last couple of years, the main reason being their capital strength, which could be stronger, but is still better than their competitors. JP Morgan has put itself into a position where they can take advantage of the situation to grow the company, but as upright as their position is, do not expect a great rally in the stock price till the mortgage market strengthens and consumers start spending again. That brings us to the end of this Markets.com company profile of JP Morgan & Chase. Again, we thank you for joining us. I'm your host, Luisana Swegart.